Good morning, everybody. Well, there's that old saying, be careful what you wish for. Well, everybody wanted rate cuts, they got it. But hey, I think it was and I explained this in prior. I didn't expect what happened yesterday, tell you the truth. Not to the extent that it did, that's for sure. Um, but I thought the evidence was there that there was the potential for a bad reaction to it. Uh, Transports was selling off. And man, did they take a dive. Holding up, they held on the area of that pivot just above the 200 MA. Obviously, this has negative implications for the economy. Um, and we'll see how 2025 unfolds. But, to see a sell off like this and what happened in the markets is just a bad sign. Whatever. Look, who knows where it's going to end as far as that goes? You never know. But when we see a reaction like we did, where institutions at the end of a year are dumping things across the board, that says whatever gains I have, I don't want to take the chance to hang on and see if the damage isn't so bad. We're getting a little gap up here this morning, nothing of significance, but this is negative stuff. Part of the concern was these interest rates that were looking like they were heading lower, and they turned and ripped to the upside. And we've talked about the breadth, deteriorating breadth, you know, which began at the end of November and declining, declining, declining. Now, when you get a breadth number, down near a minus 300, historically, you get a bounce. A bounce. You do not mean you're going back up to where this came from. Okay. Uh, the 6,000 strike that was on here, clearly, that um, that that point where you had those huge open interest in puts and calls that were going to expire this week. It was like that was an additional force that ignited things to the downside, because usually it's like, a whole number, those puts and calls in opposition of each other, what was going to be a sticking point, would hover around there and it just sliced right through it. It closed below the 50 MA. I'm on this chart, down to the next swing low there. And now this unfilled gap that has been there for a couple of months probably gets filled. I don't know if it gets filled by the end of the year. Um, who knows? Maybe it gets filled by the end of the day. In any event, clearly uh, bad stuff. Well, hey, if you're bearish, it's good stuff. But if you're long, and you didn't have your stops in, you didn't have a good day. Um, and with internals, we want to see some bearish sentiment. It's still up near the highs. Right? So there was this strong belief, right, almost 100% the Fed would cut. So everybody knew, right? That's what they had to do. Not had to do, but was expected. They did it. And the commentary after that was, hey, you know what? Don't expect more in the short term. And, that's like telling a heroin addict, hey, we're out of, needles, and, I don't know what you're going to do about it. And so the proverbial shit hit the fan, and down it went. And there's still all this bullish sentiment up here, and this has to come down. So while we get some ebbs and flows, clearly this looks like it has to go lower. All right. Let's see where this 13-week is. Yeah, it's down there. It stayed down there. We talked about, the fact that this was going down. It's going down, and, you know, whenever we hear, and we all hear, opinions about what the Fed's going to do, raise rates, lower rates, this is your go-to chart. And if this can steadily declines, yeah, they're going to cut. You go back to prior years, you know, those of you that are subscribers, go back and read the advisory letters here, and you'll see a chart of this. Hey, this is going to start going up, right? And it's going to be bad for the markets. And clearly it was. It's just historical information that we use, just like charts that we look at price patterns. It's not, a crystal ball is ours is better than someone else's, so to speak. It's just that we just look at the charts and the historical relationships between interest rates and the markets and putting that together and say, hey, you know what? This is what's happened in the past, and this is what's suggesting is going to happen now, and that's the best you can do. Putting the odds in your favor. So now, as we sit back and see, maybe today is just going to be, a back and fill day. Things are kind of just flip-flopping around here for the moment. We'll see where things are at. Before, we could look at this. You see it's down near prior low, wide range bar. All right, so we look at that. It's going down. It's going down. Maybe it'll hold at the 20. Maybe it'll hold at the 50. Oh my God, it's not holding. Everybody hit the bid. All right, get out. Where's the lifeboats? And so now it's now near this prior pivot low, wide range bar, climactic bar. It begins to stabilize. Always got to look at the regular Dow, and you see, similarly coming down here into the unfilled gap, closing below the 50. That's a one measurement institutions use, held, right? The 100 MA, the 20 is equal to the 100 on the daily. It's in an area of support. And so the thinking was, oh, down 7 days in a row, 8 days in a row. Really? Near this area, it's going to hold. Well, the news came out and it didn't hold. Value stocks. Oh, it should hold here. This is the risk of news. It's the unknown and what the reaction might be. And, clearly through all the moving averages, you can see where the 100 was, the 20 down there, cut through all of these pivots. Yeah, it's going to stabilize. 200 MA is down a line there with that pivot low. Not a happy way to end the year. But the potential was there for this with this rotation where, so a few semiconductor stocks and money rotating into the Magnificent Seven. We've got this void, which we talked about. I think in MT Live, we talked about, these accelerated moves, or it was in the green room yesterday. We always discussing different technical concepts in the green room. And so we have lots of great discussions there about different stocks and different patterns. So this has room to move down, and it could move down considerably and not violate the trend. And so when we look at these kind of exaggerated moves, right, though that move in the Dow and the value index, those look like moves that end a move. When I say end, it doesn't mean it's going to go up a lot. I always clarify that where a wide range bar ending means that the momentum is going to slow down. So it doesn't mean go long. It just means that, you're probably going to be pretty foolish if you're thinking about shorting them at this point, where this is an igniting bar with a void below. And it's gapping up a decent amount, actually. You have to look at the individual ones, not more than halfway, but, that's gapping up. Markets are gapping up here a bit. Semiconductors, this was looking, it was a mess. It's a mess. some price action here, or maybe it could have moved up toward the top of the range, was a reasonable thought. News comes out, right back down again. So, it's good for the moment that it didn't violate those pivot lows. So we still have a trading range here. It's it's on the 200s. It's something that we will monitor to see if this goes sideways over the next week or so. That opens up the door to moving down toward the next pivot. And that would be more of confirmation of what happened yesterday in bearish environment, which is, look, as active traders and investors, this is going to create a giant opportunity. So from that point of view, it's good. Those that are long term and okay, I'm going to hold on, whatever it is, I'm not worried. I guess if you're in your 20s, 30s, 40s, whatever, yeah, whatever, keep averaging down, it'll be fine. If you're in your later years, well, you know how that goes. All right. KRE, banks slammed. Right? We had this bullish move, and this is one of the reasons you need a way to update information. Right? What's going on that you don't get stuck in the past, And so now all of this, which looked like things were going to go higher, that's off the table, no doubt. FDN, nasty crack, internet to the downside. Home builders, woo. Right, we talked about that, right? Especially in the newsletter. It was like, why are these going down? And interest rates were dropping at that time. Was a a bad sign. So wide range bar ending, well, it's not a time to buy, but it's likely to stabilize. Well, the NAR got destroyed, and most of them were getting killed ahead of yesterday, and that was another bad sign for the broader markets. Retailing, right? Breakout, consumer saving the day, so on and so forth. Look, it's part of what we always got to take away from a sell-off like this is that the saying throwing the baby out with the bathwater. It doesn't mean everything's bad. It just means institutions across the board were hitting the bid and just saving their gains. Can't blame, so we will continue to monitor this and see what shows relative strength and weakness. Clearly, there was a lot of weakness across the board, and that's bearish. Gold, just a mess. We talked about this becoming a mess earlier. Silver, Alex mentioned silver. Yeah, we said this was a problem here, that it came down so hard, so now it's moving lower. So we have the charts everywhere where the volatility has increased dramatically, range expansion, and it's going to be difficult to find opportunities because what we look for is contractions in ranges, breakdown failures, breakout failures, patterns that would suggest continuation. And so after a day like yesterday, those kind of patterns are not going to be available. So, we're always selective, but look, it's going to be a little harder to find those opportunities. Bitcoin still looks great, right? Kind of a lot of more overlapping bars here, so kind of messy, but that still looks good. NQ's a bounce in the context of yesterday, not a big deal. And I'll just repeat one of our concepts: wide range bars are power bars. Now, this, of course, is extended, and it certainly appears to be an igniting bar. It violated major support, but it's the weakest link in the chart, meaning it creates a void. Where is this going to stop? If buyers, just even technical buying, can start to, feed on itself, meaning, okay, it's just reached an extreme, where are the sellers going to come in? And we look to the left and look for like areas of what we call minor resistance as to turning points. And so if this begins to turn right here and starts to roll over, and from a day trading point of view, I would view that, well, you know, it's on. We have that support here. It's down a lot. This could be a W bottom type of situation for day trades. But if it turns over here and starts, well, it would have to turn rather quickly, right? Because that's what you want to see. Fear up here, and they dump it. It comes down to retest, and you get some bottoming action. But if it goes sideways a bit and starts to crack, well, that could open up the door to lower. So again, we're in a spot here of, hey, you can trade the bounce. Excuse me. The same wide range bar, and difficult to pick a spot as to where it would turn back lower again. So it's one of those situations where you got to create resistance. That means like creating a pivot on a smaller time frame. Like here, if it retests this area and then rolls back over again. But so far, this is, just a little relief thing, which we anticipated last night. What happened in the green room? The dollar is continuing up, and that's not good either. It's a strong dollar. Yeah. You want to go to Canada, you want to go here and there, your dollars are going to go a lot further. But for U.S. companies trying to sell overseas, they're becoming less and less competitive. So bad market, strong dollar, different stocks are going to get hurt double. SPX, I didn't even look at yet. But clearly yesterday, it just blew through that. And remember yesterday, I said, wow, the strikes got so far apart from what they were. Seemed kind of crazy. But that was just, as I said at the time, the anticipation of extreme expectation for big moves, 57.10. So now this has gone down a tremendous amount. And let's see 57.10 where that is. It ain't going down there today. It's not going down there today. And I say that as if you can bet your life on it, which don't take it literally. But after a day like that, we'd need another day like that to get down there. And I've seen that happen. But, the economic news is already out. So I think it would already be diving. 59.85. Well, 6,000 would distance at this point. And prices are about here as we looked at SPY chart. I think this gap's got to get filled. And, I think more, just going by historical measures, it tends to be a slower kind of a day after a day like that, everybody catching their breath. We'll see how it unfolds. All yours, Dan.
Yeah, including us catching our breath. I said in the video last night, I've been at this full time over 25 years. I cannot remember a post-Fed announcement that had such a vicious one-way reaction without the typical, moves within 5 minutes and then moves every 30 minutes. So it's crazy bearish. But I think we'll be able to get some 0 and 1 DTE put spreads and factory work, see how far we retrace. And yeah, as Greg said, I'm more interested in climbos like this instead of, for counter trend bounces, put spreads. And then shorts are going to be harder to find. So the same discussion we have when the markets are extended to the upside and we're looking for new longs applies to the shorts. And here's a perfect example. for shorting, I'm gonna be looking for things where the event bar just happened, close to resistance, close to the 20 MA. Right there is a beautiful picture. And it's gapping up a little bit. So it's only going to hit under yesterday's low if it continues weak. I had another one here. Where are you that I posted? Merck. Look, Merck's another one. Identical. Breakout failure from a bottoming pattern. 5 sideways bars, range expansion, top and tail, target 95.50 area. So I'm not crazy about it as a swing trade because of reward to risk, sell setup weekly, but that's the type of pattern I'm looking for new shorts. You know, obviously not these climbers, that's retarded. Let's look at earnings here. MU is a big one. And well, actually, let me get alarms first. So right in this Climo yesterday, and I started to bounce, we shorted the 505 puts, 1 DTE, so they expired today, right at 50 MA. So we're going to have a beautiful gain at the open. And that's on alarms. We got stopped out of a number of things, obviously, that were bullish positions. We have a number of short positions that we're just managing. Myrna, let's see, there's another fantastic example. Yesterday, close to the 20, close to resistance, price void. So we bought puts on that. Looks great. TD, we're short. We're in trail mode, TD. I move the stop, tighten it up. Sell setup daily, bear 1, 2, 3 weekly. So you get the picture of what we're looking for. All right, now back to earnings. So when I was doing the video last night, oh, Myrna low alarm, nice. When I was looking at doing the video last night and monitoring earnings, I saw MU getting killed. It was under 90. And I said, well, it's right there right now. And then that was dragging down the Qs and the semis, of course. So I was a little surprised the Qs were up as much as they were in light of them being down more after the close yesterday. So that means collectively of the NASDAQ 100, there's, it's just mathematical fact that the other bullish things are outweighing the drag of any of the semi gap downs. Len getting whacked here. Now see, this was a climb going into earnings. I actually shorted the 134s myself, so that's against me, obviously. But I posted this as a new trade. This is a gap and snap candidate. So I'm in it for my dad, sit through it, and I'm going to be looking at it as a new trade. Look, 134 is at the bottom of this chart. And that's down from 180. And then look at XHB, the sector. That's another, we were talking about this, the wide range ending. But wide range ending doesn't mean buy, it means start paying attention. That, yeah, a tradable bounce is near, but we still need to, drill down to a smaller time frame and pick our entries. CAG here. I have an alert. This is some earnings stock, but another type of breakdown. Bear 1, 2, 3, 180 on the weekly. EPAC, I don't see any prints. MU, we know about. SCS, gapping up, no pattern. Whiskey Sierra, gap and snap candidate. Gap and snap. ACN, I got it on my other computer, so get rid of that. Let's put Whiskey Sierra there, milking. Nasty gap. Now see, that's not a gap and snap pattern. Oh, wait, I don't see any prints, but it shows it here, $22. $22 is what I call a nasty gap, but doesn't mean anything. The gap's too big to short. And I don't know, I got no bias right now. All right, ACN, I did an earnings trade too. I did a Condor. Let me look, Condor. And I know a couple of you did it. So I did the 325 puts, $10 below the 200. And the 390 calls, $12 above my chart here. So I'm gonna have a nice open gain on that. I'm just bidding a dime, I always put in pre-market orders just to see if I get filled. CTOS, that was a nasty sell setup, gapping in 195. It's a real company. It's a nasty monthly though, so but we're short-term traders. We'll see what it does, but no bias right now. PegX 141. Bullish gap, a garbage pattern. DRI. Wow. Wowzer, that's a bullish gap. Man, gap into the top of the range. What is DRI? What sector is this? This is some housing. Couldn't be. 1 second. I'm gonna look. Restaurants. All right, thanks. Yeah, I had to open TC. All right, CAG. CAG alarm. Yep, I see now it's gapping too big, so no interest. All right, ace, ace again is going to be, so spready. I don't expect to get filled. This Opto went against us yesterday, but I said hold up on the stop. The spreads are ridiculous. We have a put spread of $2 wide. All right, I just got filled on my ACN Condor for a dime, so I'm out of that. I was actually bidding a nickel to get out of this $2 wide, and it's still showing 50 cents for some reason. That is massive for $2 away. So Alex, CME, this was on your list. CME, this could be, there's a ton of resistance here on the 15, but relative strength to the market, maybe 30-minute high. TD is stopping out, or at least my alarm went off. Yeah, let's go ahead and take the money. We have a nice short here. A Lilly low alarm. That's a call spread. Let's see what the juice is. It looks great for a call spread. Wow, MU is getting killed. All right, the Lennar, nothing to do yet. Let's see how much I'm underwater. I just did a one lot. I'm underwater $40 is all. But I'm not liking the price action, so I might kill it for a $40 loss. The spreads is why. Spreads are ridiculous. It's spread, it's 0 by 180. Are you out of your freaking mind? Oh, now it's ripping. All right, I'm gonna bid 0. These spreads are friggin' ridiculous. All right, I'm gonna bid 30 cents just for the heck of it. Dava up alarm. This went against us. If this were to close like this is a new trade for tomorrow, an add. That is a nice reversal. Oh, let's see what our cues are. Oh, I'm at a line at 30 cents. Nice. I thought that was going to be a loser. All right, that's good news. So I'm 2 for 2. I'm out of ACN and Lynn. All right, cool. Let's see where this cues are. I was bidding a nickel. I'm not feeling. And I also did IWM into the close. Let me see where that one is too. So 505 puts for today. It's 13 cents. Let's move stop this pre-market low right now, this pre-market buy setup. 519.48. MCK alarm. Um, Greg, that's one you found in MT Live.
Can't see your chart. What was the symbol?
Mick, MCK. Nothing to do, never mind. I always have early alarms.
Held up yesterday. Medical distribution. That was the one that I wanted to buy a couple of weeks ago, and then it gave it up. That sector IHI, I think it was. Recently broke. Yeah, wow, that came down hard yesterday. But medical devices was
Dava alarm. The IWM, I did the 213s. It's 4 cents. I could kill it if I wanted to, but I'm bidding 2 cents. I'll just leave it for now. Adobe, yeah, it was on my list. The answer is yes. It just depends on how aggressive you want to be in terms of confidence. If it were 0 DTE, I'd say yes. But obviously it's 1 DTE, and the question is, do you trust it right now? And I would say no with the cues falling here. So actually, I didn't get filled at 10 cents. I got out at 13, so let's do that. Yeah, so I don't trust it yet with them. We actually got sell setups on the 15-minute markets. And I'm gonna kill my IWMs here to nickel, just, so I don't have to worry about it. All right, so I'm out of those trades. Um, yeah, Greg showed you mags earlier. This would be a great pattern to do a call spread on, but they don't have weeklies. I already looked. And they're not very liquid. Myrna, let's tighten our stop. How about right over this little thing now? 39.44. We got 40 and a half, 43 and a half. That's 580. On my list. It's just right at resistance with Q's breaking down. I personally would wait for 30-minute high, but obviously you know what you're doing for your own account. Yep, totally, yep. Q's coming back nicely on the 5-minute chart. So that's a good sign for the bulls that want to trade, day trade long into the bounce. Look at MU's pain. Bizun. He's back down. So they're still very, very timid here. So that's why I said careful and swing. Oh, careful. All right, Octa, we're out. Myrna new low. That was a nice trade. All right, Adobe. Yep, see, why, remember that discussion we just had? After 7 minutes, I did not trust it. And I will set a new alarm now at 4:47. Well, Len bounced nicely. XHB, not as much. Financials, bullish gap, SMH possible double bottom here using pre-market data, but I don't trust it. Wow, Greg, look at yields, man.
So this is bad, you know. It could be viewed as good, right? Depends how you want to look at things, but in the broader context of everything else that's going on, it certainly doesn't look good, especially the market's reaction to it. But this guy, this Wharton professor, Professor Siegel was on, I think it was on CNBC this morning. I don't know if you
Yeah,
caught it.
yeah, he's always in there.
Yeah, and he was saying that, you know what, yeah, it's going up, but you know what, and you know what, we had this conversation there, you know, it's like, well, you know, if it's could, and it could, he believes, and it could be related in somewhat to an expanding economy. And
Oh, bullshit. Not with looking at the transports.
right, right, you know, so I mean, he's twisting it the way he wants to, but you know, like you're saying, you know, the transports are collapsing, all these other sectors, materials are going collapsing, and it's like you think that there's economic growth, you know,
Mhm.
and so anyway, that's why we look at the charts, and it's not a positive thing. And in addition, yeah, if it was true, that would be fine because you know that growth, you know, eventually relates to greater, uh, you know, expanding earnings and so on. And so even though interest rates going up becomes, hey, do I go and buy, you know, relatively riskless, close to riskless short-term bonds, 5-year bonds, or whatever I want, you know, versus putting my money in the stock market with that kind of risk, you know, that argument still takes the case. But when you have transports and materials and other things collapsing, the dollar going up, it doesn't, you know, necessarily and most likely doesn't relate to increasing earnings, you know. So anyway, yesterday was a serious day, obviously, and you know, whenever we have an expansion and volatility like that in ranges, it takes time for things to settle down and information to shake out. And, you know, was it an overreaction or was it really something that is going to result in, you know, recession or a bear market or whatever? We'll see.
There, this Merc looks good. Day trade. Uh, Lily, let's see where the juice bar is. Eight hundred, 810. Wow. I wonder if there's pending news. This is still massive juice. It's a 60 cents. See if we can get 75, a tiny little bounce. But Lily looks great. Man, Intel is now closer to 19 than 20. I remember saying my 20 alarm went off, but that was from consolidation, not fluid move down. That thing is garbage. Yeah, I like it. Yep. You had a new low reversal and 180. And EPAM is stronger though, because it's a big old bull rectangle above the 2050. But yeah, they're both good. This would be a great 1 DT here. The 36s. 15 by 30. The VIX is actually a bullish 15-minute chart right here using pre-market data. I was thinking more of what Jim Kelly said when he typed to me that Powell said, "Good luck, Mr. Trump, in your White House." I think he was saying because Trump doesn't like him. So I think he was indirectly saying, "Good luck getting all your shit through and keeping a good economy and getting all your goals passed because the punch bowl is over. You ain't getting your interest rate cuts like you wanted. So kind of a backwards FU." That's what I think Kelly was saying, but I had to digest it. I'll call him later and find out. Yeah, LI, yeah, bottoming pattern. Yeah, yeah, yes, it's China, but yeah, gap over a red bar. This thing's very gappy. Look at all these island reversals. So I personally don't like it, but I did keep this. I kept one of these on the list. What was it? It was an ETF. Um, I don't know. Let me go through. Let me clean this up. I'll find it. No, it started with an L, I think. Um, Remember when somebody gave me three of them and I wrote down Baba and then that other one? I'll find it. I got it in here somewhere. All right, ACM. Wow, CTOS getting whacked. CAG I mentioned as a short, but it was a cap and go. Wow, KMX gave up that. Need my whiskey, nothing. If so, nothing. CDS I have as a Climo watch. I got an alarm. CI. Look, see, these things ain't moving. Even though they're Climos, there's no potent turn. Hey, Greg, remember we were talking about range expansions, and I said I see them more on the long side.
Mm-hmm.
See, had yesterday's bar been the fifth bar up, then you got much more confidence of it being an ending bar. But I see so many rockets that you better be careful fading those. Adobe new low. Um, there's another blast off one from Acoma, Wimmy. All right, Lily, we need a bounce to get filled. Apple's a call. I would look for a 1-2 call spread. There was no premium. Transport's a mess. So yeah, we got these three. All right, where are you? Triple D I have as a bottom fisher from yesterday's class. Daily, weekly, monthly. Hopefully it just bobbles around here for a couple more days and holds yesterday's low. Axta is a Climo. Let me set an alarm. 35.60. Or SPY V, see, stabilized, but there's no pattern yet. Cal Z, same. 5, I got an alarm, Adobe, AMAT, crap, call spread. Look at that, I can't bounce. Looks horrible. Eight. Yeah, it's just up so much, but relative strength. Here it is, you all. I said it started with an I, but I was off by one letter. Yin. That's the ETF I was talking about. One of you mentioned yesterday. So let me set an alarm on the yen at 28.55. Oops, mess. Wearable gold I'm deleting. Roku I liked and that got smacked yesterday, so I deleted that. Wow, Greg, your Upwork. I mean, I scanned. I looked at over 100 stocks last night. There was there was destruction everywhere.
Trying to find a needle in a haystack, huh?
Mm-hmm.
Not that it's tradable, but look at DRI. I mean, it'll eventually be tradable, but an entry at this point doesn't make any sense because they
Mm-hmm.
reported earnings this morning.
Right. Yeah, it's a restaurant.
That's a nice gap from that long base.
Shop could be a 120 for next week. $0.20 is all. That's a nasty top. 180 reversal. Broker. Yeah, it's a buy setup. I'll set an alarm 61.67.